and welcome back to this week's look at the major news stories to have impacted the market so far. And well, only one place to start really, and that's banks. And will there be more bank failures? It's fair to say volatility abounds, particularly in the banking sector. And we've seen some pretty serious news coming out over the last 6-7 days. In fact, we've seen the second and third largest bank failures that have ever happened in the last week. The first is Washington Mutual. That was $307 billion back in 2008. Second, we've got Silicon Valley, obviously happened very, very recently, $209 billion. And also, from just the last few days, Signature Bank at $118 billion. Now, in fact, former Federal Deposit Insurance Corporation chairman, a bit of a mouthful, William Isaac, has no doubt that there'll be more bank failures this year. So bank stocks, unsurprisingly, are down. And in fact, earlier this week, we saw shares of First Republic Bank down 78% in just a day. Others that have been hit quite hard include PacWest, Western Alliance, and Charles Schwab, although things seem to be settling with them just very slightly. A lot of that is to do with their ties into the tech industry as well. Now, on a more positive note, President Biden assured America, and by default pretty much the rest of the world, that individual deposits were safe, but shareholder investors were not. They took their chances, as he said. Now, on top of this, obviously quite US focused stuff, also we've seen Credit Suisse suffering very, very badly, down massive lows. But they have today announced that they're receiving support, or going to receive support, from the Swiss National Bank, which just seems to have eased those downward trends just very, very slightly. If we look at the wider implications here, looking at the S&P chart, we see high volumes labelled number one, and the S&P Futures Index seems to underline, without a shadow of doubt, the growing anxiety that the markets are feeling. And in fact, it even fell below the support line, which is labelled 2. Now, this is a fast-moving story. It's dominating news channels. And interestingly, a lot of people are asking, what effects will this have on Fed monetary policy decisions? We're about to come on to the Fed and CPI data from last week. But if you're involved in the banking sector, volatility is there. Do not forget your risk management techniques. Okay, so in line with the banks and what's been happening with them, there was a lot of focus looking at US CPI and how Fed's decisions may be affected by what's going on. Well, the inflation data was not surprising, thankfully. I think that's fair to say. It coincided with most analysts' forecasts. It's down to circa 6%, which was as expected and does show a slowing of the rise in prices. Didn't really cause much change in the dollar index pricing, and it was a little, and I say a little based on what's going on, positivity for stock markets off the back of it. So the data was no surprise, but tensions are certainly mounting on how the Fed is going to react to this banking crisis. Many analysts are saying that the banking crisis could be exacerbated by further increase in interest rates, obviously the Fed's preferred method of controlling inflation. That's mainly down to their exposure in the bond markets. Moody's downgraded the US banking sector from stable to negative this week. Ken Griffin, founder of the Citadel hedge fund, believes that the US capitalism is crumbling before our eyes. And the S&P downgraded the rating for the First Republic Bank that we spoke about earlier to negative. Not really surprised when it falls 70% in one day. At the back of this, though, we did see a little bit of Swiss franc price action, quite strong, as it's being viewed as a safe haven. Now, slightly affected, of course, then by news from Credit Suisse itself. But for 3 days, we saw dollar Swiss drop quite sharply to important support levels labelled 1 here. But the Swiss National Bank has come out and said it's going to help, and by help, I mean sink billions of dollars into the Credit Suisse in terms of funding. So it's a very dynamic situation. If the bank stabilise, we could see a rebound there for dollar Swissy above that support line. But what happens with Credit Suisse could be a major driver here. So again, the ongoing stories happening as we speak. Keep your eyes and your ears open. Okay, for our third story, we're going to stick with the currency, and we're going to have a look at the Turkish Lira crisis. Now, the Turkish economy is highly diversified. I mean, its industry base is amongst the most developed in the Middle East. And in fact, a lot of people say it resembles more European nations in terms of diversification and where it's at. We've got advanced telecoms, you've got tourism, obviously, you've got computer science, you've got fintech and several more. It's certainly diversified, but it is somehow troubled. Over the past few days, we've seen the Turkish lira has plummeted to new all-time lows against the US dollar. It had 18.97, currently still trading around the 19 mark. Why is this happening though? Well, we've got presidential and parliamentary elections in Turkey on May the 14th, which are no doubt adding to the uncertainty, despite the fact there's still some time away. Will President Erdogan get in again? I mean, there are concerns over his policies on the economy and exceptionally high inflation rates, for example. And it's now also looking at the significant economic impact of the terrible earthquakes that we've seen over the last few weeks there, to horrific situations. And this sort of slide has happened despite the Saudi Development Fund depositing $5 billion into the Turkish central bank, because it sees further improvement and growth from that Turkish economy. It's not been a good ride for the Turkish lira for some time. If you look over the last 5 years, the Turkish lira is down 300% compared to the much beleaguered Great British Pound. And it, in fact, is one of the most popular tourist destinations for UK residents. And you can sort of see why with falling rates such as that. It's also been an exceptionally popular tourist destination for Russians, mainly due to its sort of independent and neutral stance. But that huge inflation, we're talking potentially 70%, wipes out a large proportion of the revenue that it gains, particularly from that tourism industry. It's an economic region to watch closely. Nobody's sure what's going to happen election-wise, other aspects in terms of geopolitical concerns as well. But it's fair to say, at the moment, the Turkish lira is well and truly beleaguered. Finally this week, we're going to take a look at oil and the fact that oil's been hitting fresh lows so far for the year. And not to have to repeat myself too much, but the banking crisis is having a direct impact on it. Obviously, there are concerns over the Credit Suisse. The main shareholders, Credit Suisse Saudi Arabia, can't support the bank financially due to various regulations. Yes, we've had the Swiss National Bank coming out and saying, we will help. We are going to pump billions in. And it's also the concern with the banking crisis. It dampen the positivity with regard to China's oil consumption increasing over the coming months as things get a little bit back to normal there. Also seeing an increase in stockpiles. In fact, the US has been holding off on selling its reserves, due again pretty much to the banking crisis, until we see what's going to happen. And there are definitely comparisons between the current banking crisis and 2008. And in fact, a common feature between the two of those was a decrease in the oil price, if we have a look at 1 and 2 on the chart there. But why is the banking crisis having such an impact? Well, it can lead to a slowdown, obviously, in economic growth, and thus a decrease in demand for raw materials, which, of course, crude oil is. In fact, we see the price fall below the psychological level of $70 a barrel and broke the support line that we can see in blue on the chart. If it does transpire, this banking crisis is very, very similar, and like 2008, we could see $60 a barrel and $50 a barrel. Though, as I mentioned earlier, the SNB has come out and said it's going to support Credit Suisse, and that has sort of meant that trading oil has been pretty flat so far today. But again, we see one sector, if you like, in terms of banking having significant impact across the globe in other sectors. It's going to be an interesting few days and potentially weeks for sure. So take care of yourselves, use your techniques, and we'll see you soon.